All right, good morning, everybody. Today is Monday, February 23rd, and we have about 3 minutes till market open. Today's market open direction is, it might flip on the last second, but currently looks like a buy, but it might flip on the last second, so we just have to make sure. But currently, it's looking like we might get a buy. So we have about a minute till market open. Um, So it looks like we might be going for a buy here, but it's going back and forth. So we have to wait to see which one it will be. I really don't like when we get these situations where the candle flips on the last second. It's gonna be a tricky one. See. 20, 15 seconds. Hmm. 5 seconds. Oh, it's a buy. Uh, all right. So yeah, so today's market open is a buy here. See if we can follow through. And also the market open scalp won today for 1:3. So I already took that on the account that I normally take that on. Let's see, we might get 1828.9. Might get a sell scalp up here if price gets here. Oh, full TP. Yeah, price. There's a lag. Again, today there's a lag on trading view, it looks like, but full TP on the market open, there is a lag. Yeah, so price is actually skyrocketing. So there's a lag on trading view, like we saw on, if you guys remember. So there's a lag on trading view. So actually this has already hit full TP. There's a lag on, you see that? There's a lag on trading view. Yeah, full TP on the market open entry. Let me see. There's an opportunity to take a sell scalp here. If it does validate, if we do get a green X, but yeah, full TP on the market open entry. And we'll see if we get something here. Yeah, so today's market open has hit full take profit. So quick profit right there. And even the market open scalp, you can see because of that, you see that gap right there. So today's trades pretty good entries. So this is just something I'm seeing if we can correct back down here. Yeah, let's see if we can get another red X. Probably not. Anyway, full TP on today's market open. So this is a gain for 1.5%. So again, if you take this trade, it's one trade a day, literally one trade a day. If you take these trades with me, just you can take it with 0.75% risk, and you pretty much just follow through on that. Let's see something here. I'll wait for an entry at 49,621. Let me see. I'll wait for an entry here. If price comes back down here, I'll look to enter like exactly at this SAR. But again, for me, for you guys, the trades that we're following is just that one trade a day. So if you catch the one trade a day with me, like that's all you need, and you just risk 0.75% per trade, you really don't need anything else really. So we'll see if this comes somewhere around here. I can set an alert. And looks like all my accounts got that trade. It's a nice entry right there. So again, this is the trade we took this morning. Yeah, I'm not really comfortable with this one, so we'll hold off on taking that one. Let's see. All right, yes. So today's quick, nice win there on market open. Again, today there's still this gap. Like if you guys remember on Friday, we had a gap in the market between trading view and like a regular broker, but that's that liquidity that's building up. And if you remember, this was the same. If we go back to the hourly time frame, if you guys remember last week when we were analyzing Friday's move, so you see we had heavy support there and also heavy resistance here. So on that market, which is why I'm glad that it flipped for a buy today, because remember during market open, it was playing between a buy and a sell. But on that last few seconds, we were able to get a buy signal up here. Or on the closure of the 915 candle. Yeah, but anytime you see these gaps in the market, it just tells you, again, it tells you like a big story where you have some people getting wiped out one way or another. So at least today, also again, this market open scalp hit full TP as well for a 1:3. So we'll see if we find anything else. But that should be it for probably today's trades. See, this one is going for. Yeah, I think we're still gonna push up unless maybe we come back to close out this gap, but I think we might still keep pushing around here. So in the meantime, what we can do is to update these entries. Save as report. All right. Uh, so for the market open, I have two entries. So one entry, I look at the technicals. So one entry, there are days I won't take a trade for the accounts linked to it. So for this particular one that I've labeled as technical intraday market open, I tend to look at the 5 minute and 1 minute candle patterns. And so for example, today I'll give you the breakdown for today. Give me a second, let me make sure. Okay. So for example, today, if we look at the 5 minute, so 5 minute is to my left, 1 minute is to my right, right? So here, what you can see on the 5 minute, we have the pre-market high and pre-market low. So this was the pre-market high. This was the pre-market low, somewhere around there, if I'm not wrong. Yes. And I'm counting before or since the open of London. So somewhere around then. And then what you had is you had a big downtrend or a big sell-off here to create the pre-market low. And then you had this continued chart pattern to the upside, to the upside. So we had a recovery, this V pattern. So same thing on the 1 minute time frame. On the 1 minute time frame, we had that big sell-off. And then what are we seeing on the 1 minute? You have higher highs and higher lows. So that's giving you a trend pattern. So on market open, I was expecting price to keep pushing up. And that's again another reason why I took a buy. But this technical analysis is different from, for example, is different from this indicator here that gives the buy or sell in trend. So this indicator here, it doesn't look at it doesn't look at the trend. It doesn't look at any technical analysis. It's just based off of some market movements I've seen for US30 before, because I've been trading it for about I think maybe 5 years now. So this indicator is just coded to my own logic, just to give one trade a day. But I do have two accounts that take the same entry market open, and not really same entry. So sometimes I can take a buy on this account, on the account that I follow this, which is what we are looking to, or we are using to take the one trade a day entry. And then for the technical, I can take a sell on that one. But today, both of them lined up. So both of them were pointing me to buys. So for example, that's the one I just updated the win here. And again, this one I just risk 1% per day. And this is a 200K account. Um, and you can see the win rate for this is very good. So because again, remember, for this specific account, and maybe in future I can separate my screens to show you guys maybe the day I'm taking, what I'm taking on each strategy. But again, I don't want it to be confusing. But you can see the win rate for this is 70%. So far, 10 trades, 7 wins, 3 losses. And again, I'm going for a 1:2 risk to reward. But you can see this one, the win rate is very, very nice so far. It's only 10 trades, so not really a big sample size, but so far so good on that one. And then what we can do, we can upload, and let me see. Let me just see if we get any other potential trades. So far, no other potential trades. No other potential trades here. And if we look at the trade, so remember when I tell you guys, we look at the candle that hits take profit or stop loss, and we ask ourselves, is it rejecting against any order block, right? So remember on Friday, we had a fake out on that reversal. So the same analogy here, right? And I think this happened to us on Tuesday or Wednesday as well. So you can see on Friday, this candle that hit stop loss, it rejected. The highest order block was actually a bearish order block. It wasn't a bullish order block. Because this one's, again, once you're back testing order blocks, it's not the most convenient or whatnot. But last week, this bullish order blocks, and I think they're like 15 minutes. So they hadn't been formed yet. So the highest order block that had been rejected last week when we hit stop loss on Friday's trade. And Friday last week, we only had one loss. So it was a bearish order block. And I took that sell for a 1:3 here. Post-market open sell, and unfortunately it ended up losing. But look at where it went to reject from, right? Went and rejected exactly from that bearish order block. And you know what happened for the rest of the day? Price came back down and shot down and would have hit like the 1:3. So last week I mentioned, and this is the 15-second time frame, so that's why it's going a little slow. So if we look at what happened, remember last week I said you can do one of two things. You can either, personally, I look at the candle that hits take profit or stop loss, and then if it rejects against an order block, I make sure whether it makes sense to go in the direction of the order block. And if it does, I enter on the closure of that candle that hits stop loss or take profit. So that's one way to do it. The other way is to wait for the retest of the order block that's based off of the candle that hit take profit or stop loss. So yes, on Friday and also on Tuesday, if anybody who had waited for the order block retest and went for a 1:3, yes, they would have won both trades. But personally, I have seen more times than not, the trade will continue pushing in the opposite or in the expected direction without retesting the order block. And I think partly another reason of this retracement too is, again, the size of the wick, right? So I think going forward as well, maybe it's something that I'll either get another account for to specific, because I don't like mixing strategies on one account, is looking at the size of the wick and maybe waiting for a retracement of like 50% of the wick, or waiting for a retracement of like, to the order block. But, it can be a simple rule such as if the wick is like X amount of times longer than the body, you wait for retracement to the order block, or you wait for a 50% retracement to the week. So like this week was 714, 392. So call it about 300 points. For so call this 550. Yeah. So if I would have waited maybe half of this week, and this is ideally how I develop my own strategies. I just try to brainstorm and see if I would have survived a specific push, and then I adjust my strategies towards that. So 50% of the week would have been somewhere around here. So something like that, I would have survived that, and I think I would have gone ahead to hit the 1:3. So maybe what I will do is, yeah, maybe what I'll look into is to see if I can get some other confluences for that particular trade setup. But we'll see. I'll look at that going forward. But yeah, the reason I'm talking about that, so today, the candle that hit take profit. So this one, I wouldn't have entered a sell. I would have only entered a sell if, so here I ask myself, has this candle that has hit take profit? And again, if we come back to US30, remember on Monday, this hourly, because no, I'm sorry, on Friday, when we're on Friday, we tried to sell and we had this big push to the upside. If US30 comes back down here, US30 is going to continue flashing, because here I don't think this support is going to hold anymore. It's been tested a little bit too many times. But I would have wanted to take a sell today, like after this take profit hit. But the reason I didn't take this sell here for a 1:3 is because what are we looking post-market sell? What are we looking for here? So we ask ourselves, the candle that has hit take profit, is it rejecting against any order block? Yes, it is. But it's rejecting, yes, against many bearish order blocks, but it's also rejecting. Give me a second here. I'm going to take something on one of my other accounts. Mm, mm. Let me see something here. Let me take a quick 38. Um, a second. I'll take a small scalp here by for US30 based off of a 15-minute SAR rejection. That candle is a little too high, but it is what it is. I need a green X. If I see a green X here, I think it's gonna be this one. Yes. 1:2. I got in at a better price point. Wait, did I get taken out? No, it actually won. So I guess the slippage got me, and slippage worked in my favor, but I just took a small buy there. 49,369. Minus to two. That was based off of a 15-minute SAR. Let's see, rejection scalp 29. So say 15. Okay. Uh, go back here. Where were we? Okay. Yeah, so I was talking about this rejections. So yes, it rejected against many order blocks, including bearish order block. But since this was a take profit, so I would be looking to take the reversal, right? So if a candle hits take profit and you want to catch the reversal, you would be looking to go the opposite direction of the market open trade. So for today, I would be looking to take a sell. Or I would have been looking to take a sell on the closure of this 15-minute candle. But then I asked myself, what is the highest order block that the candle that hit take profit rejected from? So in this instance, the highest order block was a bullish order block. So in this instance, I'm not going to take the sell because the highest order block was a bullish order block, but I would be looking to take a sell. So if I'm looking to take a sell, the highest order block in this instance should have been a bearish order block in order to allow me to take a sell. So in this instance, this is the reason why I did not take this sell right here for a 1:3. And then let's see, we can update the regular intraday market open. Which is what we typically take. Save as report. Statement. See if we'll get anything else here. Again, if US30 comes back down here, this hourly, we're gonna push. US30 is gonna flush this because we've just had this support has been tested so much. So I would expect a big continuation to the downside. Um, so again, here, this is the one we used to. So now this particular intraday market open one, it's one trade a day. So this one is guaranteed one trade a day. So regardless of what the technicals say, this one is guaranteed trade, literally one trade a day. And you can see for this one, compared to the other one where I only have 10 trades, this one I have 33 plus 42. So I have 75 trades with a 44% win rate. So of course, the win rate for this one will be a bit lower because it has definitely more trades and it really doesn't filter out trades based off of technicals. But even with that, with a 44% win rate and a 1:2 risk to reward, this is this is a very good strategy. The only time I saw it didn't work as well was during December and actually mostly December months. So maybe going forward might not be the best one to take during December months. Let's see if we get anything else, but we have 5 more minutes before the live session is over. I don't think we'll get anything much, but we'll see. The only other thing we can get here is maybe a small SAR scalp because all these EMAs have been tested. Yeah, so we have 2 minutes. I don't see anything else happening. So that should be it for today. Uh, we'll meet again tomorrow and see. So far for this month, again, this market open trades, I would recommend risking between, personally, I risk 1% per trade, but just know that historically, like if we look right? Because again, here we're looking at statistics. If you look statistically, we do have a period where we can have 7 to 8 back-to-back losses. Again, mostly this was during December, and December is kind of like an anomaly month, and typically I don't like trading in December. But minus December, you'll see like November, I only had 3 back-to-back losing days. In November, the losing streak was 3 back-to-back days. December, even if we want to consider it, you can see we had 1, 2, 3, 4, 5, 6, 7, 8. So if you do have like a prop firm account and you have a max drawdown of 10%, you can see for this particular one, you would still have survived in December, but um, it would have been a close call because you'd have had 8% back to back, but then you'd have gotten back to -4% with these 2 back-to-back wins. But again, just know that there's a possibility of having 7 or 8 back-to-back losing days, definitely. In January, the losing streak for January was, I think, 3. Yeah, 3 back-to-back losing days before like a break or before a win came in. So not bad. In February has been good so far. Even in February, you can see the losing streak is 3 days. So the average losing streak is 3 days. And since we are going for a 1:2 risk to reward, that really helps. I may edit it a little bit, maybe to do a 1:3, but which would mean cutting down my stop loss and keeping the take profit the same, but we'll see going forward. But yeah, just expect like between 3 to 8 back to back losing streak or losing days. Yeah, but other than that, that will be it for today's live session. I will see you guys tomorrow. Have a good rest of your day. All right, guys, peace.